Hey guys, so many people trade with margin, and margin is great because you get to use the house money to make more money for yourself. But there's something that's very important when you're trading with margin. You have to understand exactly how that works. The only way, listen to this clearly, the only way people lose money when they trade is when they sell something for less than what they paid, right? So there's two concepts to trading that you have to understand as a successful trader. You have to understand the big difference between paper gain and paper loss and realized gain and realized loss. Paper gain is like, okay, I buy some stock and the stock goes like this, it goes up, maybe it goes down, but it's only on paper. It doesn't matter what that paper value is unless you actually sell it and take a realized or a recognized or a real loss, right? So when you trade options, it's so easy. I'm telling you, you might think it sounds difficult, but it's really not. There's two concepts you need to know. You need to know how to sell a put, which you're committing to buy a stock if it drops below a certain value. And that's cool because worst case scenario, you end up buying a stock that you like anyway on sale. And then the second concept is selling a covered call. And that's super conservative also. You already own the shares and you're agreeing to sell them if it goes higher. If it doesn't go higher, you don't sell the shares. In both those scenarios, you're paid a premium. You get to keep that no matter what. It creates cash flow for yourself, so you make money on a weekly basis. Who cares about paper gains or paper losses for that matter? Because you can't spend that, right? Can I go out to dinner with that? Can I pay my mortgage? Can I pay my rent with that? Can I go to the mall and go shopping with that? No. You can only spend cash flow. That's why that's the most important thing, right? So let's go back to margin. Margin is good because you get to use the bank's money, and then you get to make more cash flow for yourself. But the only way traders lose money, listen guys, I've been trading many years, and the only times that I have lost chunks of money is when I was taking on too much leverage. I had too much margin and I didn't effectively understand the effects that my account would have if I had positions drop to certain levels. So this is like the most misunderstood thing. And listen, I've traded with lots of different broker dealers, Schwab and E-Trade and Interactive Brokers and Tasty and Tradier, and the list goes on and on and on. They're all kind of similar, but here's the thing that all of these brokerages don't give traders. They don't let you know, they don't give you the ability to have like a hypothetical. Okay, if the stock drops a certain value, a certain percentage, what's that going to do to your available funds? That's the important part, guys, because once your available funds goes down, and if it goes less than zero, that triggers what we call a margin call, right? Most of you guys have probably heard of a margin call. And if you don't have more money to put into your account, that's what forces you to liquidate something, to break a trade, and then take an actual loss. Well, guess what? Wouldn't it be an amazing life if you were able to identify ahead of time, okay, if this particular stock drops X percent, would that produce a margin call? Yeah, broker dealers don't provide that information. Why? Because the game is like rigged and the cards are stacked against you always. The Wall Street and the big investment guys, they want you to rely on them. They want you to put some money in some stupid SPY ETF. Why? Because they make billions of dollars off of that. It's not that hard to learn the two strategies. Sell a put, sell a covered call. You can use margin. So first of all, if you don't use margin, it's super conservative because then you're never forced to break a trade and take a recognized loss. But I use margin because I didn't, when I first started, I didn't have as much money in my account to produce the cash flow that I'm looking to produce. I need a certain cash flow to live the lifestyle that I live. I live an amazing lifestyle. I live in New York. Right now I'm in LA. I came here to visit my kids and I'm just chilling while my daughter's making breakfast over there. And I do what I want, when I want, with who I want. You can do the same thing. Two strategies that you need to know: sell a put, sell a covered call. If you're using margin, that's totally okay, but you need to understand how margin works and the effects that your positions will have if they drop to certain levels. Because here's the thing, guys, the market goes like this, right? We don't know what it's going to do tomorrow. I certainly don't know what it's going to do tomorrow, and I want to trade as if I don't care what it's going to do tomorrow. And here's the great news. So like I was saying a moment ago, broker dealers, they never share this information with you. like how margin works. What are some hypothetical scenarios? If the stock drops X percent, is that going to produce a margin call? I've tried to get this for so long, and I've had spreadsheets that kind of manually put that stuff together, but it's a very complicated equation, and it's not like this 1 + 1 = 2. So here's the great part. I've been coding myself a margin application to help you do that. I want to help other people like me. Listen, if you're living your life and you're not happy and you're working some 9-to-5 job and your boss sucks and you want something different, you can absolutely change your life. Your life is whatever you make it be. I promise you that. So check this out. So join my inner circle. I have the link below. All that's going to do, first of all, it's free, and all that's going to do is that's going to put you on a list. And once I roll my margin application out to the public, you'll be one of the first people to know. If you're trading and you're using margin and you're not using certain tools, it's just a matter of time before your account blows up. I'm telling you, this has happened to me countless times, but no more. Because smart traders, when you trade effectively and you have mathematics behind you, and listen, you don't have to be some MIT grad or have some PhD in physics or something like that. No, it's not that hard. I'm going to show you exactly how this tool works. It's going to be a hypothetical tool where you can input, okay, if MicroStrategy drops 10%, 12%, 20%, what does that do to my account? Does it produce a margin call? That is the secret sauce to trading. Trading is so easy to make money, and it's harder not to lose money. So you have to avoid those big account blowups. That's the only time traders lose money, is when they're forced to sell something for less than what they paid. So anyway, I hope this really helps. Cheers for now, and be sure to subscribe to my inner circle. Take care.